Looking forward to 2023, we see inflation is likely to moderate, but we do not expect it to retreat to central bank's target of 2%. Interest rate rises will eventually come to an end, but we expect this to be too late to avoid a growth slowdown in developed economies. A recession in these countries is likely. Taking all this into account, we are expecting to see heightened volatility in financial markets as investors grapple with the new normal. Inflation, an end to easy central bank policy, and a flat to negative growth environment means a huge regime change. Very different to what investors have seen since the financial crisis. A new regime requires a new playbook, with greater focus on sourcing returns from going more granular. We see positive returns not across the board, but specific to certain countries, sectors, themes, and asset classes.
So one of the areas for 2023 that we're very interested in is, as a result of what's happened in 2022, we see significant attention coming back to the bond market, especially within the high quality corporate bond market. So that's the debt issued by companies. We think that there's some fantastic discounts on offer in that sphere, especially within the high grade area. And what we want to do in 2023 is very much focus in on that and start to put some very high quality investments into our clients' portfolios. Likewise, we think emerging market debt, so that's the debt of companies and governments from emerging markets, has fared very well in 2022 comparatively. And what we want to do is look to try and capture some of that in 2023, which we think could be quite strong if the market does recover.
From an equity perspective, one such opportunity lies in securities that offer an attractive level of yield, or income. We expect dividend-paying stocks to fare better alongside less interest rate sensitive parts of the market, such as healthcare and consumer staples. Our overarching focus remains on quality stocks with resilient margins at reasonable valuations. Alternative strategies will also continue to play a big role as diversifiers to equities, with a focus on real assets and infrastructure as a defensive play, with clean energy becoming a large focus.
So one of the areas in 2022 that we've seen come under pressure is very much gold and silver, or precious metals. They started off very well at the beginning of the year, and as we moved through 2022, they started to come under significant pressure as the dollar rallied. Conversely, as we start to see the dollar coming off those highs in Q4, and as we move into Q1 and Q2 of 2023, we're seeing a lot of positivity coming through for the precious metals market, and we've started to see them coming back already. Secondly, we believe that in 2023 there's going to be a larger focus on energy infrastructure, and specifically green energy infrastructure. Silver is a very large component of green energy infrastructure, and we see a pickup in demand, but we don't see a pickup in supply. Now that to us spells a positive market for silver in 2023, and we very much want to capture that. The way that we're going to capture that is through traditional silver bullion ETCs, exchange traded commodities, but also active funds that are buying the equities of gold and silver miners to try and capture that equity proponent as well.
After a strong period for broad equity indexes, we see the next bull market fueled by those companies enabling and driving a transition to a sustainable economy. A sustainable economy is one that is resilient and provides a good quality of life for everybody. It stays within the limits of the planet and helps keep global warming within the 2 degrees threshold. The opportunities in driving this transition are not just within renewable energy, but across all facets of delivering this sustainable economy. One particular theme that we are particularly excited about in 2023 is the increasing awareness around biodiversity preservation. More than half of the world's economic output is moderately or highly dependent on nature, with ecosystems playing a vital role in greenhouse gas regulation. However, awareness is only now increasing, with calls for mandatory disclosure around biodiversity growing louder. This is a theme that TAM's ESG portfolios are invested specifically to gain from. This, among industry-leading funds in enabling the climate transition, water and waste management, and the transition to a circular economy, are just some of the multi-decade themes we believe are going to show real strength versus broad equities in 2023 and beyond. TAM's ESG portfolio specifically will continue to generate genuine positive impact through their investments come rain or shine, with 2023 being a fantastic opportunity to gain exposure to these generational investment opportunities.